NIO stock ended the week on a softer note, closing Friday at $7.70 per share, a decline of 19 cents or about 2.4% from the previous close. This pullback came after several sessions of gains that had pushed the stock up toward the upper end of its trading range. Throughout the week, NIO repeatedly tested resistance in the high sevens, brushing up against the $8 mark without breaking through. Friday's action continued that pattern, showing a market still deciding whether to consolidate or break out. The stock has been forming a clear structure over the past month. Buyers consistently defend the $7 level, stepping in whenever the price dips. Sellers appear in the upper sevens, taking profits and leaning against the rally. This tug-of-war has created a recognizable range with support at $7 and resistance between $7.80 and $8. Friday's move back to $7.70 is not a sign of weakness but a sign of this range asserting itself again. It's the kind of back-and-forth movement that builds a base before a decisive move. At the same time, Tesla reported record quarterly deliveries of 497,000 vehicles worldwide, up more than 7% from a year earlier and exceeding many forecasts. A large part of this surge came from U.S. buyers rushing to lock in federal tax credits before they expire, but even accounting for that, it was a strong performance. These numbers validate the idea that global demand for electric vehicles remains robust even in a challenging macro environment. They also remind investors how high the bar has been set by the sector leader. Tesla's scale, efficiency, and global brand recognition remain unmatched. When Tesla beats expectations, it attracts attention and capital to the entire EV theme while sharpening comparisons that make investors more selective about rivals. Friday's trading reflected this dynamic. Early enthusiasm about Tesla's deliveries spilled over into Chinese EV names, briefly lifting NIO and its peers on the expectation that strong demand for Tesla might translate into a rising tide for the sector. As the session wore on, that enthusiasm faded. Some investors took profits after a good week. Some recognized that Tesla's surge was partly a one-off driven by tax credit timing, and some rotated capital into Tesla itself rather than secondary plays like NIO. The result was a modest pullback for NIO even as the broader EV story stayed in focus. Another element shaping sentiment is China's new export permit policy for electric vehicles, scheduled to take effect in 2026. The government will require EV makers to secure permits before exporting cars, with a stated goal of safeguarding the image of Chinese brands overseas by ensuring quality and compliance. Initially, this news hit shares of NIO and Li Auto as investors worried about increased bureaucracy. On reflection, it could be a net positive for premium players like NIO. The company has invested heavily in its brand, its battery swap infrastructure, and its sub-brands Onvo and Firefly. In a world where only authorized, high-quality producers can export, these investments become a moat rather than just a cost center. It could face fewer low-end competitors undercutting it in Europe or other markets. This is a subtle but important shift in the narrative that shapes how investors view NIO's long-term overseas growth prospects. Technically, NIO continues to build a pattern of higher lows. Each dip into the low sevens brings in buyers. Each rally toward 8 brings in sellers. Friday's close at 770 reflects that range. Until NIO can close above 8 with strong volume, it remains in a consolidation phase. But the repeated defense of $7 suggests accumulation rather than distribution. Buyers are not fleeing, they're waiting for a decisive breakout. Fundamentals support this view. Deliveries are at record highs. Analyst coverage has turned more positive, with UBS recently raising its price target to $8.50 and citing near-term upside. The export permit system, while still 2 years away, could reduce long-term uncertainty. Short interest remains significant at about 9% of the float, so any decisive move above 8 could trigger additional buying from shorts covering. This is the kind of fuel that often powers breakouts. Tesla's record deliveries provide a validation effect for the electric vehicle theme, showing that demand remains strong. They also create a benchmark effect, setting a high standard for rivals. For NIO, the takeaway is to double down on what differentiates it: premium service, battery swapping, unique design, and a quality-focused export strategy. These are the attributes that will matter most under the new permit regime and in competitive overseas markets. NIO's position relative to its peers remains distinctive. BYD and XPeng are also growing, but NIO's focus on premium service and battery swapping sets it apart. Under the export permit system, that differentiation could become even more important. Tesla's record deliveries show there is still plenty of demand for EVs globally. The question for NIO is execution. Can it scale while maintaining quality and leverage its infrastructure advantage to capture market share abroad? These are the strategic themes that will drive the stock over time. Friday's pullback to 770 is not a reversal of the story. It is part of the process. NIO is still pressing against resistance, still delivering strong numbers, still building out its overseas plans. Tesla's record deliveries highlight both the opportunity and the competition. For investors and traders, the takeaway is to watch the key levels, understand the catalysts, and keep the bigger picture in view. With support holding and a clear narrative of growth and quality, NIO remains a stock to watch closely as it sets up for its next move.